Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, we are going to solve the example of final account of banking company. This example was asked in SPPU March-April 2022 examination. So we are going to solve this SPPU example of final account of banking company. So this is the example on the screen. The example is given. The following is the trial balance of Dhan Vikas Bank Limited as on 31st March 2022. So this is the trial balance of Dhan Vikas Bank Limited, and in particulars the information is given. You can read the information, and next along with the trial balance there are some additional informations. Okay, so adjustments are given like provision for bad and doubtful debt, then interest accrued on investment, unexpired discount, interim dividend, endorsement, authorized capital, then premises, market value of Indian government securities, and so on. Okay, so these are some additional information provided with the trial balance. Now here what they have said, that prepare profit and loss account for the year ended 31st March 2022 and balance sheet as on that date in a prescribed form. Okay, now see, we are preparing what? Final account of banking company. So as per Banking Regulation Act 1949, every banking company has to prepare the balance sheet and the profit and loss account in a vertical format, okay, in a prescribed form. So balance sheet is given in form A and profit and loss account is given in the form B. So I will show you the format of balance sheet and profit and loss account. So this is the format of balance sheet. In this format, every banking company has to prepare the balance sheet. Then this is the format of profit and loss account. According to this format, the profit and loss account every banking company has to prepare. Okay, so take the screenshot of this format, and this format is to be written in a proper sequence only. So you can see in the balance sheet, okay, the balance sheet is what? In a vertical format. Okay, vertical format. So in vertical format, the first will be what? Liabilities, next will be the assets. Then here in the profit and loss account also, income is at first, then expenditure, then profit and loss account, and appropriations are given. Okay, so in this format the bank has to prepare the balance sheet and the profit and loss account. Now each you will see in front of capital there are schedule. Okay, so each schedule, like capital schedule number is 1. So every liabilities and assets, separate schedules are to be prepared. Okay, so schedule 1, schedule 2, schedule 3 deposit. So in this way you have to prepare individual schedules also. So total there are how many schedules for the banking company? 16 schedules are there. Okay, so from 1 to 5 schedule belongs to liability, 6 to 11 the schedule belongs to asset. Then in profit and loss account, 2 schedule 13 and 14 belongs to income side, 15 and 16 belongs to the expenditure side. Okay, and there is one separate contingent liability schedule, that is schedule number 12. It is separate from the balance sheet. Okay, so every after preparing the balance sheet and profit and loss account format, you have to prepare individual schedules. Okay, you have to prepare individual schedules. Now here I have already posted some entries in the schedule. While solving the sum, you will understand. Now see, so after preparing the balance sheet, after preparing the profit and loss account, as well as after preparing the schedules also, let's solve the example. Okay, now see, first of all you have to read the question carefully. After reading the question, mark the adjustment. Okay, mark the adjustment, read the adjustment also carefully. After reading the question, trial balance, then read the additional information like adjustment, and then second step is what? You have to mark the entries, okay, as per the schedules. Now see here, I have already marked here in the trial balance, see subscribed capital. Now subscribed capital is how much? 50,000 equity shares of rupees 10 each, fully paid. Now this is what related to capital. So in which schedule this entry will go? This entry will be posted in schedule number 1. Okay, schedule number 1 is what? Capital. Next is what? Reserve fund. Now reserve fund is what? Statutory reserves. Okay, so schedule number 2, the heading of schedule number 2 is what? Reserves and surplus. Then reserve and surplus will we have to post in reserves and surplus, that is schedule number 2. Okay, then so on like this. In front of each entry I have marked the in which schedule this entry will be posted. Okay, now next is what? Adjustment. Okay, now here for adjustment also I have given some information. Now adjustment number A, in which how many, every adjustment will have what? 2 effect. So first effect, adjustment number A, will be in schedule number 9. Second effect will be in provision and contingency. Then adjustment number B, interest accrued on investment. Now interest accrued on investment means what? Interest is earned but not received on that investment. Then it will have 2 effect. First effect in schedule number 13, second effect in schedule number 11. Okay, then expired discount, which is also called as rebate on bill discounted. So schedule 2 effect in schedule number 13, first effect, and second effect will be in schedule number 5. Then interim dividend declared was 4% actual. Now this adjustment we have to post in appropriation under balance in profit and loss account, and there are some working notes to be made for adjustment number D. Then adjustment number E, endorsement made on behalf of customers. This will have only 1 effect in schedule number 12. Then F adjustment is what? Authorized capital was 80,000 equity shares of 10 each. Now authorized capital, anything related to the capital will go in schedule number 1. Okay, that is capital. Next adjustment is rupees 10,000 were added to premises during the year. Depreciation at 5% on the opening balance is required. Now here in adjustment number G, there are 2 hidden adjustment. First is what? 10,000 were added to the premises during the year, and depreciation at 5% on the opening balance. Now this adjustment will be where? First effect in schedule number 10, second effect in schedule number 16. Now see here, premises are given. How much is premises? 50,000. Now here read there, 10,000 were added to the premises during the year. Now this 50,000 is given premises is the closing balance, right? That means 10,000 is already added in 50,000. That means what is the actual value of the premises? 40,000. So 40,000 plus 10,000, that's why in the closing balance 50,000 is given. And on what depreciation we have to charge? We have to charge the depreciation on the opening balance, that is 40,000. Okay, now while solving the sum you will understand. Next is what? Adjustment number H, market value of Indian government security was 3,90,000. Now this effect will be Indian government. Here in the question Indian government is given 4 lakh. Okay, and market value of the security is how much? 3,90,000. So 4 lakh is what? The cost of that securities, and market value is 3,90,000. That means there is a loss of 10,000. Okay, so first effect will be what? In schedule number 8, investment, and second effect, the loss of revaluation of the shares on the securities, will be in the schedule number 14. Okay, so like this we have to mark the this thing what? Entries as well as the adjustment. Okay, now we'll solve the example. Now see, already you have prepared the format of balance sheet and profit and loss account. Now in balance sheet and profit and loss account, you don't have to do any working note. You will do all the working note in their respective schedules. Okay, and here only the final total will come in the balance sheet and in the profit and loss account, right? Now first is what? First is subscribed capital 50,000, equity share of 10 rupees each, fully paid, schedule 1. Now in always remember, in schedule number 1, that is capital, always the first entry will be of authorized capital. Now this authorized capital is given in where? It is given in the adjustment. Okay, see the adjustment number F. Authorized capital was 80,000, equity share of 10 each. So equity share is how much? 80,000. Okay, and multiply by 10 will give us what? Authorized capital. 80,000 multiply by 10, 8 lakh rupees. Okay, so 8 lakh rupees is written. Now then how much capital or the how much shares are been issued? 50,000 shares are issued. Okay, see here, 50,000 equity shares are been issued. So issued capital 50,000 multiply by 10 will be how much? 5 lakh. Now how much is the subscribed and called up and paid up capital, equity paid up capital? 50,000 multiply by 10, 5 lakhs. Okay, so total, now see, for the schedule number 1 capital, you will not take authorized capital for the total. You will only take the value or the amount of subscribed, called up and paid up. So what is the total of subscribed, called up and paid up? 5 lakh rupees. Okay, now next is what? Next is reserve fund. Reserve fund will go in which schedule? Schedule number 2. Okay, so reserve fund, right? Reserve fund. Now how much is the reserve fund? Reserve fund is 2,50,000. 2,50,000. Write the value in the inner column. 2,50,000. Why we are writing 2,50,000 in inner column? Because if there are any reserves during the year, we have to add it. Okay, so compulsory out of the net profit earned by the bank, 20% is to be transferred to the reserve fund. That's why we are writing the opening balance, that is 2,50,000 in the inner column, and we will add during the year reserves. Okay, while closing the profit and loss account. Now next entry is what? Loan and cash credit and overdraft, 2,85,000. So this entry will come in schedule number 9, that is advances. So in advances, write loan, cash credit and overdraft, 2,85,000. Okay, now see, on loan, cash credit and overdraft, there is adjustment. Okay, what is there? There is adjustment. Okay, that's why I have tick mark. What is the adjustment? Provision for bad and doubtful debt is required to be made at rupees 5,000. So see, adjustment number A. First effect in schedule number 9, second effect in provision and contingencies. Okay, so right here in advances, less provision for bad and doubtful debts. Okay, so how much is the bad and doubtful debt? 5,000 is the value. Now 2,85,000 minus 5,000, write the final amount in the outer column, 2,80,000. Now this second effect, okay, first effect of the adjustment we have given in the schedule number 9, advances, which we have reduced from loan, cash credit and overdraft, 5,000. Now this 5,000 we have to write in where? We have to write in the provision and contingency. Now where is provision and contingency? It is given in the profit and loss account under expenditures. Okay, now here you will write 5,000. Okay, 5,000. Second effect is done. And if there are any other provisions, okay, and contingency, then add both the numbers and then write the final amount. But now in this example there are no other provisions and contingencies. That's why only one provision was there regarding bad and doubtful debt. So directly I wrote 5,000 there. Next is what? premises. How much is the premises? 50,000. Now on premises there is adjustment. 10,000 were added to the premises during the year and depreciation at 5% on the opening balance. Okay. So now premises is what? Fixed asset. Okay. Now what is the adjustment? See, 10,000 were added to the premises during the year. So actual premises is how much? Here in trial balance, what how much it is given? 50,000 is given. Okay, so 50,000 is what? The closing balance of the premises, and this 10,000 is already added in 50,000. That means what? Actual premises is of how much? 40,000. So 40,000 is what? Our actual premises. And how much we have added? 10,000 we have added. Okay, so then total how much premises will be there? 50,000 premises. Okay, 50,000 premises. Okay, 50,000. Now this 50,000 is what? The closing balance. Now depreciation is to be charged on what? 5% depreciation is to be charged on the opening balance. So opening balance is 40,000. So 5% of 40,000 is what? 2,000 rupees. Okay, so 50,000 minus 2,000, 48,000. Okay, so premises total amount is 48,000. Next entry is of government security. What is government security? 4 lakh rupees. Now there is adjustment on government security saying that the market value of the Indian government security was rupees 3,90,000. So this adjustment, now government securities is what? Investment, right? So government security cost is how much in the trial balance? 4 lakh rupees, but market value is how much? 3,90,000. Okay, so you will write 3,90,000 in the outer column. Now 4 lakh and 3,90,000, there is a difference of 10,000. That is what? A loss on that investment. Okay, so this 10,000 lost you will write in other income. Okay, that will be what? Minus 10,000. We are already in the loss. So what will be there? Loss on revaluation of investment, 10,000 rupees. Right. Now next is what? Current deposit, fixed deposit, saving deposits. Okay, all these deposits will go in schedule number 3, that is deposit. Current deposit is how much? 1 lakh. Fixed deposit is 1,25,000. Saving deposit 1,50,000. So directly write in schedule number 3 in deposit. So current deposit is how much? 1 lakh rupees. Fixed deposit is 1,25,000. Saving deposit is 1,50,000. Okay, there is no adjustment on the deposit, so directly write the amount in the outer column. Next, after deposit, what is there? Salary. Now salary, general expenses, rent and rate taxes, director fees, these are all operating expenses. So where it will go? Here I have mentioned in schedule number 16. Salary 28,000, general expenses 27,400, rent and taxes 2,300, director fees 1,800. Okay, so schedule number 16 is what? Operating expenses. So here I have already written salary, general expenses, rent, rate, taxes and director fees. So write the amount. There are no adjustment. So write here the amount 2,300, director fees 1,800. Now here see, we have forgot to give the second effect of this depreciation. First effect we have given the effect in schedule number 10, fixed asset. Now this 2,000 second effect we have to give in operating expenses as depreciation on premises, 2,000 rupees. Okay. Now next is what? Next, after director fees, next is profit and loss account as on 1st April 2000 21. Now this profit and loss account is what? The profit of the last year, okay, previous year. So this will go in P&L appropriation. What is the profit of the last year? 16,000. So right here in the profit and loss account, here see, under the heading of profit and loss, net profit, okay, brought forward, that is previous year profit. How much is the previous year profit? 16,000 is the previous year profit. Now this is done. Next is what? Interest and discount, 1,28,000. Interest and discount will come in schedule number 13, interest earned, okay, interest earned. So schedule number 13, interest earned, interest and discount. Now write this 1,28,000 in inner column because there is adjustment. Now what is the adjustment? Adjustment is what? Interest accrued on investment was rupees 8,000, okay. So this is the interest earned on the investment but we have not received. So add this in schedule number 13 as add in interest and discount, add interest accrued on investment 8,000, okay. So total will be how much? Total will be 1,28,000 plus 8,000, 1,36,000, okay. Now from this there is one more adjustment, that's adjustment number C, unexpired discount, rebate on bill discounted amounted to rupees 380, okay. So this we will reduce in rebate in interest and discount. So 380. So final amount will be how much? 1,35,620, okay. Now the second effect of both the entries, okay, second effect we have to give. So for interest accrued on investment, first effect of 8,000 we gave in schedule number 13, second effect we have to give in schedule number 11, okay, that is other asset. See here, interest accrued on investment, second effect 8,000 done. Now first effect of rebate on bill discount 380 we have given in schedule number 13. Now second effect is to be given in schedule number 5, other liabilities and provision, okay, other liabilities and provision, rebate on bill discount 380, okay. Now next is what? After interest and discount adjustment is also solved. Stock of stationery 8,500. Stock of stationery schedule number 11, okay. Stock of stationery 8,500. After stock of stationery, next is bill purchase and discount 46,000. Bill purchase and discount schedule number 9, advances, okay. So bill purchased and discount, there is no adjustment, so directly write in the outer column 46,000. After bill purchase and discount, next is interim dividend paid 17,000, okay. Now this is important, okay. Now read the adjustment on interim dividend paid. There is adjustment. Interim dividend declared was 4% actual. How much is the interim dividend declared? 4%. Now interim dividend is declared on what? On the capital of share capital, okay. So how much is the share capital? 5 lakh is the share capital. Now see here in the working note, okay, interim dividend paid. How much actual dividend is paid in the trial balance? It is given how much? 17,000, okay. So right here interim dividend paid 17,000. Now so interim dividend declared in the adjustment, how much is declared? 4% is declared, okay. 4% is declared. So interim dividend declared 4% actual. So 4% on what? Capital, okay. How much is the subscribed and issued capital? This thing paid up capital 5 lakh. So 4% of 5 lakh, 20,000. So actually dividend is to be paid how much? 20,000. But actually how much they paid? Only 17,000 is paid. Then remaining is what? 3,000. 3,000 will be called as unpaid dividend, right? So now here see this unpaid dividend 3,000 we have to write in schedule number 5, and interim dividend declare, that is what? 20,000 we have to write in profit and loss appropriation. Okay, I hope you have understood this adjustment. This is very important. Interim dividend in trial balance paid is how much? 17,000. In adjustment what it is given? That interim dividend declare is 4% actual. So 4% on capital 5 lakh rupees. So 4% of 5 lakh is how much? 20,000. So 20,000 was the actual dividend to be paid. But how much from 20,000 they paid? 17,000. So remaining unclaimed dividend is how much? 3,000. Means this 3,000 is not paid to the shareholders, right? So this 3,000 will come in schedule number 5 and 20,000 will come in profit and loss account appropriation. So right here in unpaid interim dividend 3,000, okay, and in this thing appropriation you will see here word is there, transfer to the government or proposed dividend. Okay, so 20,000 you will write in profit and loss account. You will write in profit and loss account in proposed dividend. Now after interim dividend, recurring deposit, this will come in schedule number 3. 20,000 is the recurring deposit. 20,000 is the recurring deposit. So write in schedule number 3. After recurring deposit, next is shares. Shares is how much? 1,50,000. Shares are what? Investment. It will go in investment account. In schedule investment, schedule number 8. So shares are 1,50,000. After shares, cash in hand with cash in hand and with RBI 1,93,000. Schedule number 6. Schedule number 6, cash in hand and with RBI 1,93,000. Next is what? Money at call and short notice 80,000. Schedule number 7, under balance with bank and money at call and short notice, right? There is no adjustment, so write in outer column 80,000. Okay, so now all the this thing entries of the trial balance we have posted. Okay, now we'll see how many adjustment we have solved. Okay, and remaining adjustment we will solve. So now adjustment number A we have solved. Okay, adjustment with the second effect we have posted. Then adjustment number 2 is solved. Then adjustment number 3, unexpired discount rebate on bill discounted, it is solved. Then interim dividend we have solved. Then schedule this thing adjustment number E, that is endorsement made on behalf of customer 1,15,000. So this will come in schedule number 12. So schedule number 12, contingent liabilities, endorsement and other obligation 1,15,000. We solved. There will be no second effect of adjustment number E. Now adjustment number F, authorized capital, we have solved it. Then adjustment number G, premises, we have solved. You can see here we have solved it in the fixed asset. Next is what? Market value of the Indian government security 3,90,000. We have already solved it in the investment only. Okay, and the second effect of that loss we have given in other income. Okay, so now here we have completed all the entries of this thing, of these schedules. Okay, we have posted. Now we have to close the account schedules. Okay, we have to close what? Profit and loss account and balance sheet. Before that we have to close the schedules. Okay, so now So before closing the balance sheet, first of all you have to close the profit and loss account. So we have to get the values of profit and loss account like schedule 13, 14, 15, 16. So first close this thing, what schedule number 13, 14, 15 and 16. So schedule number 13, total is how much? 1,35,620. Okay, so write in the profit and loss account under schedule number 13, interest earned, the total is how much? 1,35,000, 1,35,620. Okay, 620 is the total. Now next is what? Other income, schedule number 14. Close the schedule number 14. Now schedule number 14 is what? Loss. Already it is what? In minus. 10,000 is the loss. So total of schedule number 14 is minus 10,000. Next, now add this thing, do the total of schedule number 13 and 14. So 1,35,620 minus 10,000. So total of income is 1,25,620. Okay. So total of income we have got. Now expenditure, interest expanded and operating expenses. So schedule 15, the total of schedule 15. In schedule 15 there are no entries, so it is what? Nil. It is nil, right? Now schedule number 16, operating expenses. Add all this operating expenses. So total will be 61,500. Okay, 61,500. So here write in the balance in the profit and loss account, the total of interest expanded. Schedule 15 is what? Nil. And operating expenses total is how much? 61,500. So total of expenditure 61,500 plus 5,000, the total is 66,500. Okay. Now here we got the total of income, we got the total of expenditure. Now how to find the net profit or net loss? Now see, here income is more than expenditure, that means there is a profit, and if expenditure is more than income, then it is a loss. So here income is more than expenditure, so minus 1,25,620 with 66,500. So the net profit is how much? 59,120. Okay, how did I got the net profit? By minusing this two values. Okay, these two values, total of income and total of expenditure. So we will get net profit, right? So now add this profit and loss, both current year profit and previous year profit. Total will be 75,120. Okay, 120. Now here appropriation. See, transfer to statutory reserve. Now compulsory there is 20% of profit, it is to be transferred to statutory reserve. So 20% profit, okay, out of the profit 20% is to be transferred to the reserve. So how much is the profit for the current year? 59,120 is the profit. So 20% of what? 20% of 59,120. So it will be how much? 11,824. Okay, this is the profit, 20% of the profit we got. Now this profit we have to transfer to the reserves and surplus in schedule number 2. So 11,824 we have to transfer. Now there are no other reserves, right? There are no other reserves, then interim dividend we have transferred. Now next is what? Add. Now we have to transfer some profit to the balance sheet also. So 75,000 120 minus the 20% of profit and the interim dividend. That means 75,120 minus 11,824, 20,000. The balance will be 43,296. Okay, how did I got this amount? By minusing this 2 with the total of the profit and loss. Okay, so now add all these 3, add this 3, you will get the total 75,120. Okay, so that means the profit and loss account is tally. So you can see both the amount is same. Okay, now this 43,296 we have to transfer to the balance sheet. Okay, to the schedule number 2. So transfer 43,296 we have transferred. Write this amount in outer column. Okay, now total of 2. Now profit and loss account is tally. Okay, now tally this thing. What? Now close the balance sheet. Okay, now close the schedule 1 to 5, 6 to 11 and 12. Okay, so total of capital is how much? 5 lakhs. Total of capital is 5 lakh. Okay, 5 lakh is the total. Now the total of reserves and surplus. So add 2,50,000, 11,824. The answer will be 2,61,824. Okay, so the total of reserves and surplus is 3,05,120. Okay, so reserves and surplus total is 3,05,120. Now close the deposits, add all the deposit. So total will be 3,95,000. So write in deposit 3,95,000. Borrowings, there are no borrowings, so it is nil. So write nil. There no borrowings. Then schedule number 5, close schedule number 5. The total of schedule number 5 is 3,380. 3,380. Now add the liabilities and write in the total. So total will be 12,03,500. Okay, total of liability is 12,03,500. Now close the assets. Now there is only one entry in the schedule number 6, that is 1,39,000. No, sorry, 1,93,000. Then schedule number 7, 80,000. Schedule number 8, investment 5,40,000. Schedule number 9, 46,000 plus 2,80,000. The total will be 32,000. Sorry, 3,26,000. Schedule 10, 48,000. Schedule 11, 16,500. Schedule 12, 1,15,000. Okay, so now write all the total in the balance sheet. 1,93,000. Schedule number 7, 80,000. Schedule number 8, 5,40,000. Schedule number 9, 3,26,000. Schedule number 10, 48,000. Schedule number 11, 16,500. Okay, now add the add all the assets, so total will be 12 lakh 3,500. So you can see liabilities and asset total is same, and what is remaining, schedule number 12, that is 1,15,000. Okay, so in this way you have to find the you have to prepare balance sheet and profit and loss account of the bank. Thank you.